Another video. Today we are going to take a look at Cadjpy from a technical as well as a sentiment and order flow perspective. Now, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. Now, if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, we're going to start off here with the technical analysis. Now, starting here on the monthly time frame, what do we see? Now, firstly, from a monthly perspective, we can clearly see how this market had printed this massive impulse. Now, after an impulse, you obviously expect a correction before the continuation to the upside. Now, we can also see if we look left, we can see how the market is currently testing strong structs in the market as well. Now, this level in the market acted as a level of resistance. The market broke above that, came to test it as support. Support got broken, tested it as resistance, and the market's back to test it as resistance once again. So we can definitely expect a pullback before the continuation there to the upside. Now, dropping down on the weekly time frame, what do we see? Now, here from a weekly perspective, we obviously had that massive pressure to the downside, that bearish pressure on the downside. Also, we can see how the market had printed this overextended W formation. Now, after an overextended W formation, you expect a pullback to the left leg before the continuation to the upside. Now, if you drop down on the daily time frame, what do we see? Now, from a daily perspective, we can clearly see how the market on the daily time frame printed this impulse to the downside. We got the correction, and if you take your Fibonacci from the high to the low, you can see how the market had tested and is currently rejecting the 61.8, giving us an indication we can expect a move to the downside because that is considered the golden ratio. So there's a good possibility for the market to continue to the downside from exactly where it is now to the minus 27, which is going to be used as our first take profit level there as well. Now, if you go look at the sentiment data, now this tells us what retail traders are doing in the market. And I always say you want to be on the opposite side of what retail traders are doing. And we can see 92% of retail traders are selling and 8% of them are buying. Now, you might say, but aren't we supposed to be on the opposite side? Yes, we are supposed to be on the opposite side. That is 100% correct. But the thing that we can see over here is we can see this daily candle has been quite bullish, and that was obviously because the market needed that liquidity to move the market to the downside, or for these big speculators to close their buying positions. Now, this candle has been quite bullish today, meaning that they have taken most of that retail traders out in the market, because we know as retail traders we start to panic when our position runs into a loss, and we tend to close it early there as well. So we can already expect that most of that liquidity was already grabbed from the retail traders at this 92% over there as well. Now, the next thing that we are going to look at is the COT report, which is the commitment of traders. Now, this tells us what the biggest banks, hedge funds, and institutions are doing in the market. Now, we can see here, looking at the Canadian dollar, based off the last report, we can see how hedge funds came in, and this is last week's report. So hedge funds came in and they added 3,115 buy positions, and they started closing, they started closing 290 sell positions. But we can see over here that previously they also closed the overall net positions had also decreased from minus 22,680 to only 3,405. Now, that's obviously one of the reasons why we saw the CAD so bullish, and we can definitely expect the Canadian dollar to be bullish in the long term, because we know from a fundamental perspective they've also pulled through a positive CPI, a hike in interest rates, as well as a positive GDP. But that does not mean that the market is just going to go up, because we know the market moves in waves. So a pullback is expected before the continuation there as well. Now, we know that the Japanese yen has been one of the most struggling currencies out there, but like I said, a pullback is expected, and the best time for that pullback is now. I can see a base of the last report, hedge funds came in and they closed minus 21,402 longs after they added 18,000 and then another 2,000 longs. They came in, they closed 21,402 buy positions, and they started closing more of their selling positions. You can see how hedge funds are continuously closing those selling positions over there. We can see the overall net positions had further decreased from minus 16,000 to 23,000. Now, the reason why I say that this pullback is expected, because this market is well overbought, and I think it's time for some profit taking for these hedge funds and then get in at a lower price, because the overall long-term economy is doing quite well. So there's no doubt that the Canadian dollar is going to increase in strength against the JPY. But I mean, if you're going to invest in the long term, the best thing you want to do is buy a currency at a low price and then hold that wave over there. So we know that the Canadian dollar is going to increase in value, but the last thing you want to do is buy the price at such a high level. So what they are going to do is they're going to take the profit of this they're going to take the profit of all of these buy orders that they had in here, and then potentially took some profit there, then they bought slightly up. So you can definitely expect another pullback, hopefully lower 94,000 maybe, and then from there we can definitely expect this pair to continue to the upside there as well. Now I want to say thank you so much for your time. Thank you for taking the opportunity to watch the video, and if you enjoyed the video, please smash the like button for the YouTube algorithm. Thank you for your time, and as always, cheers for ears.